Hi, everyone. This is Josh with Brown Financial Advisory. I hope you're going to enjoy the time we'll spend today talking about cryptocurrencies. It does seem like there's a new news story about them every day. So, we're going to discuss three questions today. Number one, what is a cryptocurrency? Number two, what are the most popular cryptocurrencies? And three, and what I think is probably the most important, do they belong in your Brown Financial portfolio? Now, if you know us at Brown Financial, we like to start every presentation with a cartoon. So here we go. Cryptocurrency seems to be everywhere these days. Yet there's no consensus if it's speculation or investing. Though I don't think the guy at the roulette table really cares, do you? So for our first question, what is a cryptocurrency? They were invented in 2008 and are a digital or virtual means of handling online peer-to-peer transactions. As of January 2021, there are more than 6,700 cryptocurrencies. A cryptocurrency is not a commodity, not an asset class, nor a traditional currency, but it does share some characteristics with them. For example, you can use cryptocurrencies to buy goods and services, so in that way, it is like a currency. Cryptocurrencies also share some characteristics of commodities. For example, they can be bought and sold in cash markets or via future contracts. But they're not commodities because they do not represent physical raw materials. Cryptocurrencies are not like traditional asset classes as they lack inherent value. They generate no cash flow, such as dividends, which can explain their prices. Also, although some merchants have begun to allow cryptocurrency payments, they're generally not broadly accepted as a medium of payment. Cryptocurrencies also are not used as a unit of accounting like the dollar because prices, trade invoicing, and contracts are not quoted in digital units. Finally, cryptocurrency's ability to serve as a store of value, in other words, a safe way to preserve the value of people's financial wealth, is severely limited by their volatility. Cryptocurrencies are powered by what's called blockchain technology. That means a digital database or ledger spread across a peer-to-peer network that supports all types of transactions. It contains the history of every crypto transaction in a secure manner. Cryptocurrencies are actually stored in a digital wallet on a holder's computer or phone or the cloud. The wallet serves basically as a virtual bank account. I'm sure we've all heard stories of people who have lost their passwords to their digital wallet and therefore have lost all of their Bitcoin. It could be hundreds of thousands of dollars worth. And finally, cryptocurrencies can be bought and sold directly on crypto exchanges, crypto brokerage platforms, we'll talk about that later, and crypto kiosks. In fact, I've been in several malls where they have Bitcoin kiosks where you can actually buy the physical Bitcoins. For our second question, we're going to talk about what are the most popular cryptocurrencies. To talk about this, we'll first have to come up with a way to measure their popularity. So for our purposes, we will look at how often they are traded in the US and what their market cap is. Of the various global cryptocurrency exchanges, Coinbase is the largest Bitcoin exchange in the United States and the first major cryptocurrency-focused company to go public in the US. I've got listed for us its largest, based on market cap, actively traded cryptocurrencies and their prices as of May 3rd, 2021. The first one is Bitcoin. Its value on May 3rd was $57,910, or a 100% return so far this year. It was actually the first cryptocurrency. It came out in 2009, the brainchild of a mysterious, and once again, we don't know if it's a person or a group, using the name Satoshi Nakamoto. One of Bitcoin's key features was a built-in scarcity factor. Its total supply is actually limited to no more than 21 million Bitcoins. And as more of those get mined or created in the computer, the incentive to mine more goes down. Miners receive fresh Bitcoins for each new block of ledger data that is generated, accepted, and put into the chain of Bitcoin transactions. It's interesting that they talk about miner because Bitcoin is probably most often compared to gold in that its value is really whatever people assign to it. Now, I've got for you coming up several quotes from the famous investor Warren Buffett. And I've got these quotes in reverse chronological order to show you that his views really haven't changed over the years. So Warren Buffett had a few things to say about Bitcoin and cryptos in general. The first one was from CNBC in February of 2020. And he quotes, cryptocurrencies basically have no value and they don't produce a thing. They don't reproduce. They can't mail you a check. They can't do anything. And what you hope is that somebody else comes along and pays you more money for them later on. But then that person's got the problem. In terms of value, zero. A year before, he said Bitcoin, it's a delusion, basically. And then here's my favorite. In 2018, talking to Fox Business at the annual Berkshire Hathaway meeting, he says, probably rat poison squared. The next one is Ether. Its value was over $3,300 or up 347% so far this year. Ether was launched in 2015, and it's actually the native currency used by the Ethereum network, which is used in gaming and other databases in addition to cryptocurrency. Ethereum is often compared to the operating system for the blockchain network, similar to what Windows system might be to a PC. The next one is called Binance Coin. Its price was about $676 or a 1,700% gain so far this year. It is the native currency of the Binance exchange. As of last month, Binance was the largest cryptocurrency exchange in the world when measured by trading volume. And then the last one we'll talk about is Dogecoin. Its price is 42 cents, but that's almost a 9,000% year to date. This actually started off as a joke in 2013. Back at that time, there was a meme trending on Tumblr of a Shiba Inu dog. And Doge is Japanese for dog. And so Dogecoin was actually started as a joke. And I've got a little picture of the dog right there that you can look at. What I want to point out is that these outlandish returns have brought back the age-old dangerous behavioral risk known as the fear of missing out. Now, younger folks would know it by the acronym FOMO or FOMO. FOMO can tempt investors to take risks beyond what they would normally consider acceptable in search of extra return. This applies to cryptocurrency as well as SPACs, which are special purpose acquisition companies, SPACs for short, and meme stocks. Think about it, what's happened just in the past few months. At times, these have been driven higher by lots of retail investors, think Robinhood, brokerage, that had been fueled by zero-cost trading and social media posts. Okay, so now we come to the big question. Does cryptocurrency belong in your Brown Financial portfolio? And the answer is a big no, and here's why. For our clients, adding cryptocurrency exposure to their portfolios would mean reducing their allocation to traditional asset classes such as stocks, bonds, and cash, which are the building blocks of a prudent, well-balanced investment program. In fact, the Mobile Probate Court instructs conservators to not place any estate assets in cryptocurrencies and to immediately liquidate any cryptocurrency assets that a ward may have. So what are the 5 biggest risks of investing in cryptocurrencies? The first one, volatility. Cryptocurrency prices are subject to wide fluctuations. Number 2, liquidity risk. Cryptocurrencies may be difficult to liquidate quickly at a reasonable price. Number 3, lack of regulation. Cryptocurrencies are not regulated by any government or central bank. Number 4, pricing variability. There is no central market for their pricing. And finally, cybersecurity risk. Exchanges and platforms are subject to breaches. So here's the bottom line. We believe cryptocurrency speculation and caution against buying Bitcoin and other cryptocurrencies in your portfolio. Unlike stocks and bonds, cryptocurrencies lack intrinsic value and generate no cash flows, such as dividends. However, we will monitor ongoing developments and can always change our recommendation as necessary. I just want to say I am very grateful for the time that you spent today with me talking about cryptocurrencies. I hope this has helped. And I do speak for the entire staff at Brown Financial when I say we are very humbled by the trust that you've placed in us. And I promise we will continue to work hard every day to earn that trust.